What's going on, everyone? Welcome to another episode of Weeds Weekly with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And Weeds Weekly is where I bring to you every week a longer, in-depth look at what happened last week in the market, what we can expect this week. We're going to talk about getting into our sweet spot and, most importantly, getting it under contract. Also, I hope you had a great weekend with March Madness. Man, watching those games, it's so exciting. Weather was beautiful here in Austin, Texas, although we did get some crazy rain on Sunday. If you've never experienced rainstorms in the spring in Austin, we're talking Gulf size hail, egg size hail as well. And it's why am I having such a difficult time today? What's going on, everyone? Welcome to another episode of Weeds Weekly with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And I hope you had an awesome weekend. Good weather, March Madness, although we did in Austin get a crazy rainstorm on Sunday night. We don't get a lot of rain, but in the spring, when we do, it's typically intense. I'm talking like Gulf, egg-size hail. It's something just torrential downpour, lightning. I love it. It's cool, but it can do some damage. So hopefully everyone out there is doing okay. Weeds Weekly, let's just talk about that real quick, is where I bring to you a little bit longer format. If you've subscribed to the Mortgage Mouth on YouTube, you'll notice that I have 3 different play sets. I got Weeds Weekly. It's going to be my longer format where I just give a little bit more in-depth look at what happened last week, what we can expect this week. I cover a couple topics. Like I said, we're going to talk about coming into our sweet spot and getting it under contract this week. I also do a Friday wrap-up where I like to just bring everybody up to speed as we head into the weekend so we can make sure we're very familiar with what happened. And if a client asks us a question, we got it. And then I'm also cutting the daily dose. It's a under 2-minute video of what happened in the market that day, what happened to interest rates, what data came out, and how it affected them. I'm also going to start adding some educational stuff, how to shop for a mortgage, differences between loan programs, etc. So please don't hesitate to give a subscription. It would be greatly appreciated. All right, so let's dive in. The big thing last week was the Fed, right? The Fed making its announcement, and we knew going in they weren't going to do a damn thing to the Fed funds rate. We knew that, but we were very attuned to the vernacular and the exciting dot plot. If you remember, right? 4 times a year, we get a dot plot. It's every quarter, and it's where every member of the Fed gives their outlook of where they interpret the Fed funds rate will be moving into the future. And the good news is, and the warm and fuzzy that made traders feel great, the Fed still sees 2 rate cuts this year. Now, the bettors have it in June. I think it was a 67% chance that in June we'll get that first Fed funds rate cut. I'm looking at more Q3. I don't think it's going to happen until September. I think we continued this bumpy ride. As I've been saying, the term of the year would be bumpy. Said it would be all of Q1. That's been the case. I think it's going to bleed into Q2, and I don't think the Fed makes any move because I don't believe that we're really going to understand the impact of DOGE and of energy independence and of these tariffs, and more particularly DOGE and the fact that we have all these judicial judges now stepping in and trying to alter what happens on a national level when they're a federal district judge in a state. So that's got to play itself out. Possibly could go to the Supreme Court, and that's all going to take time. So the good news was, however, the Fed remained that way. So the dot plot showed a couple. The other thing that the Fed also made clear in their statement and in their vernacular, they're as uncertain as us with tariffs, with what's going on with the federal deficit, DOGE. They also are very uncertain of the long-term effect and what it's going to have in the economy. So, hey, we're not alone. That was the good news. The bright spot was we saw a complete reversal in the housing side. So the month prior, it seemed that housing fell off the map. Permits, building starts, new home sales, pending home sales, existing home sales, all turned negative. I actually put it in the Weeds Weekly, and one of them, I had a concern. This month, total reversal. This week we have new home sales. I want to say it's Tuesday. And then we also have existing, pending this week. Last week we had existing, looked great. Permits, great. New starts, good. Everything looked on the up and up. And that's a great indication that these lower rates are having an effect. The stabilization, if you look at interest rates since the inauguration, January 20th, they have been on a steady decline. It looks like we've had some stability, and the fear of a slowing economy is what's really played into that. As more people have pulled back from the markets, the Dow, the NASDAQ, and moved it over into the Treasury side, we've created some stability where we're seeing rates in the 6% range. Some in the low, some in the mid, but overall, we're not in that 7% range anymore. It's got buyers a little bit more optimistic, and we're seeing that reflected in the housing information, which is awesome. So, not to steal the thunder, back to life. We got a glimpse last week of, core retail sales actually showed an improvement. So what core means is you're taking out autos, you're taking out energy, and actually that number came in higher than expected. So, is the economy that bad? This week, we're also going to see consumer confidence. Consumer confidence just means, how does everyone feel? Because if we're confident, right, we tend to spend more. We feel better about going and buying clothes, making those big ticket purchases, maybe buying a house. So that number is going to come out this week. So last week, we got a little bit of a glimpse that maybe the consumer's coming back a little bit. They're not as concerned with these tariffs now that all the layoffs and the government's kind of settling in, so to speak. It looks like the consumer might be coming back around, which would be a great thing for the economy as a whole. However, it could also have the effect where it pushes rates up slightly because a better economy, inflation now becomes the bigger concern. So we'll see how all of that plays out. The other thing we have this week, we're going to have a couple big reads, the biggest one being on Friday, which is PCE. That is the biggest indicator that the Fed looks at for its fight against inflation. So that is going to be a big number. And as usual, it comes out on a Friday as we're heading into the weekend. So make sure you have any clients that are under contract for that house, talk to them. Have they locked in? PCE comes out. There's big economic data coming out on Friday. Make sure they're talking to their professional. And if they don't have one, this guy right here would love to talk to them. Or even if they're working with somebody, give them a second opinion. Never hurts. The other thing we have is GDP. Although it's Q4 GDP, it's going to be the revised numbers. Again, I just think it's a great indication of where the economy was. So once we get into April, the end of April, I want to say it's April 30th, we're going to get the read on Q1 GDP. Be very interesting to see the contrast. What huge effect the tariffs have had. Is uncertainty been blown out of proportion? We'll get a very good read on that. It's something we really want to pay attention to. This week, I expect a little bit of flatness. We did see today the market picking back up. It looks like the Dow is recovering. It looks like people are getting back into the marketplace. And you're going to see that. I think you're going to see that a lot this week. And I think you're going to see that playing out as we do this bumpy ride. Traders jumping back into the markets. They get a little uncertain. Everyone sells off, jumps into treasuries. So it's vitally important that you talk to your clients and make sure they're in tune with their mortgage professional to take advantage of these valleys. I keep stressing it to my clients. Don't be greedy. If you like the rate, it's come down from where you started, take it, lock it, be happy. There's going to be an opportunity to refinance in the future. You're going to be able to take advantage of that again. The last thing you want to see is interest rates go up by 1/8 and 1/4. It's a hard pill to swallow. When they've come down by 1/8 or 1/4, it's great. And if you missed out, you're like, I missed out, but I still got a great rate. It's a positive as opposed to a negative. So that's my best advice. And like I said, is it real? Is this housing rebound real? And I think it might be, which brings me to the next point. We're coming into our sweet spot, so we need to be ready. Let's let's fingers crossed, right? Spring is always the best time in real estate. We're coming out of the harsh winters typically. A lot of people are now a little bit more inclined to go out, whether it's just kick tires, but grass is getting green, flowers are blooming, temperatures are great. We tend to see a big pickup in houses for sale. And with these stabilized rates, it looks like this season's going to be a really good one. And with the data that we're seeing, hopefully it's a complete turnaround. We've had the past few springs where we've had anticipation of a turnaround, and it's never really manifested itself. These past couple springs have just been like a lot of talk, and the numbers just have not related. I think this spring we have a really good opportunity with these lower rates, and I think it's something, this is why I'm pointing it out, it's something we need to be talking about with your clients. You need to be talking about it with your clients. So often real estate agents like to sit on the sidelines as it pertains to interest rates and the financing and stuff like that. But I think really digging in and understanding what has happened with interest rates since the beginning of this year, the difference in interest rates compared to the past 2 years, and what that purchasing power means to them, I think it's huge to be talking about those numbers with your clients. So if you would like to do that and like to have a better understanding of those numbers, I'm more than happy to take 10, 15 minutes, walk through numbers as you see potentially fit for your clients, or even buckets, so you have a better idea of what's going on in the marketplace and how to talk about it. More than happy to do that so you can have those conversations. Because once again, right, it's always about touches. And coming into this good buying season, and what I think is going to be much better than it has been in the past, you definitely want to be prepared. So more than happy to offer that, coffee even, dig it, happy to help. The last thing I want to stress is getting it under contract. So often with all the moving parts that we have in real estate, we forget the significance of just getting it under contract, right? We're talking about needs versus wants. We're setting up searches. We're driving them around. We're trying to be empathetic to, well, okay, I can understand why you don't like that or this or that. And we don't really want to push the button of, hey, if we don't act fast, this could get off the market. And we got to be, at least comfortable in having that discussion and how we want to approach that. But at the end of the day, there's significant advantages to just getting a house that they like, they may not love yet, under contract. And the first one, it's negotiation power. Once you get that house under contract for your buyer, they are in a power position. Now, it's the only person that seller is negotiating with. No longer do they have in their head, hey, I could get 5 more offers, or there's 7 people that came through my house today, or you then get into a multiple offer situation, and now that seller's negotiating with 4 people. It also allows you once you get it under contract, you have inspections, you have appraisals, you have the ability, and your buyer has the ability to maybe address some of the concerns they had with that house. So again, I just go back, getting it under contract is the most vital step. The other thing it does for them, it can help them lock in at the valley. I just talked about how bumpy it has been for interest rates. They're going to move up and down, and getting something under contract quickly could allow them also quickly to get with their mortgage professional. They could be at a valley and lock in that rate sooner rather than later. Because the longer they wait, it could be a week, it could be 5 days. As we've seen these past couple days now, and over the weekend, everyone got a little bit more. They wanted to put money into the markets. We're seeing rates trend up a little bit. We're testing the boundaries of the 10-year treasury. Would have been nice that if we had gotten it under contract a couple days earlier and locked it at an interest rate. And the last thing, it may avoid any spring pump. If a house sells down the street and a seller sees that and says, man, I think my house is better. I walked through that house. They just went under contract and you're telling me, or it sells and they see a $1.2 million sale and they're sitting at $1 million, they may want to take the house off the market, or they may want to increase that price. So you're allowing the potential of the spring activity, increased activity, where you're going to see more potential for competitive offers that push the value or offers up or price points up to affect your potential offer and your potential buyer. So you want to avoid those situations. All right, y'all. I hope you have a great week. You need anything, you want to talk about those numbers like I discussed for those clients so you can have those and have better discussions and get another touch. I'm more than open for a cup of coffee as well. Please, another plug, don't hesitate to jump on YouTube, type in The Mortgage Mouth. You'll see my smiling face and give a subscription. It'd be much appreciated, and you'll be well in tune of what's going on in the marketplace with the Daily Dose every day. All right, everyone have a great one. Happy selling out there. Cheers.